Good afternoon, good evening, good morning, whenever you're watching this later on recording. So we're going to cover what everybody's most exciting favorite topic is, and that would be insurance today. So we will keep this to again around 20 to 30 minutes, just depending on how long-winded I get. Which if you said on my Zooms before, you surely know I can get there. This is not going to go well. I shouldn't say that. I may go a little deeper than I even intend to when I cover this today. But it's gonna be a little bit comprehensive. We're gonna talk about different types of insurance and the goal. If we can get one goal out of today's meeting, is what do you really need? Because I see way too many times that an individual or couple will come into the office, regardless of age. They're either way underinsured for what they really need, or they're way overinsured for what they really need. They may have had maybe it's a great group benefits policy that they have from work, and they're just buying everything and they don't really need it, or they have an insurance agent who has talked them in they need to buy everything. So, full disclosure, I am an insurance agent in the state of Georgia for what we do with financial planning and helping guide people around their financial path. Insurance plays a big part of that, or plays a part of it. So I am a licensed state insurance agent, if you want to know that. Now, you're never going to hear me just do a big pitch on why we should sell you insurance, because that's not what I do at all. Okay, so quick disclosure from the firm. Have to have that on real fast. Then we can go to the agenda for the day. So we're going to talk about family insurance needs. And that's really going to kind of go into each of these bottom four sections, the needs of a family based on life insurance, disability, long-term care, property casualty. So we're going to hit on each of those maybe a little bit different links, because there's two of those that I spend probably more time talking to clients about, or friends and family for that matter, that they should consider, they should spend a little bit more time on. The one that most people, I should say, the two most people probably spend the most time and energy, or their insurance agents talk to them mostly, are life insurance and property and casualty. Those are 100% needed, or they wouldn't be part of this presentation. But I promise you, I bet I spend more time trying to talk to families about disability and long-term care, which I will explain that in a few minutes. So the next thing, so again, assessing is what we really need to get into. You need to understand as an individual your insurance needs. So you need to look at your risk and obligations. So everybody, personally, I don't, you kind of can get probably the feel for this. I don't love insurance. I don't love taxes either. I don't love a lot, but insurance is a necessity. We have to have it to cover our risk. So the only reason we would ever, I can imagine, pay a premium for any type of insurance policy is because we have some type of risk out there we need to protect in case something happens to us bad. Now, some people do buy insurance for as an asset. Some people buy insurance to give for charity later after they pass. Some people buy insurance to fund seed money for the children when they pass, or their grandchildren. So it's not just about your own risk; it's about also wealth creation for, again, charity, family, those types of things later. So I do get that. If you have a question on that later, or a comment, I'm sure you're going to go, well, Chris, you're not exactly right. It's not all about risk. You're right. But that's a separate conversation. That's not about today. Today's about assessing risk and making sure that your obligations and those risks are covered by what type of insurance that you have. And I'll probably say this two or three times. I'll definitely say it at the end. Make sure you're getting your insurance reviewed it doesn't, when I say regular basis, I don't mean every year even, but you probably need to look at it at least every couple of years, because life changes. There's going to be times you need more, there's going to be times you need less. Your risk changes over time. So make sure you look at that. If you're younger now, I would say this for sure. If you're a younger family, small kids, I would really probably look at it annually. I would definitely try to sit down with either a really good insurance agent who can do a little bit of all this. They're not just a life insurance agent, or not just a property casualty agent. They kind of can do it all. Or sit down with us, or somebody like us, who are really who are financial planners, and we're going to take the holistic approach and look at the full picture and kind of guide you as far as what you want to consider. Because I'm trying to keep people from paying for things they don't have to pay for at the end of the day. So being overfunded with insurance sometimes just it's like use that money somewhere else. So use that to pay some more debt off, increase your savings, gift it to your grandchildren, take a different another vacation. Just it is very individualized, so it should be thought about that way and look at that every year or a year or two at least to make sure that you got the right coverage. So we'll dip into this a little bit as far as prioritizing urgent coverage and debt coverage and long-term financial goals. That's going to come into each of these four topics individually as well. All right, let's start with life insurance, since that's probably the most, besides property and casualty, the most talked about. It probably is the most talked about. Most people don't talk about the only time they ever talk about the property and casualty is their insurance on their car for the most part. But it is probably the most talked about coverage out there. And the questions that I get all the time really are, do I need it or not need it? And that is not a yes or no question. So I've already mentioned that all insurance, and you probably heard this on every Zoom I've done for any topic. It's just it's customized, individualized. There is nothing on a shelf that's canned that thousands of people can go buy and it fits everybody. I never believe that with anything. I believe everybody should have something that's designed for them, and this is really how you make the decisions, even on type of coverages that you buy. So you at some point in your life, and you may now have owned or own a term life policy, which has an expiration date. You pay premiums, it's cheaper, it's the cheapest of all coverages, and at some point it expires after a period of time. You probably have owned or currently owned, if you've owned it before, you probably own it now, a whole life policy that basically you pay premiums till you die, essentially. At some point it may be paid up where you can stop paying premiums, but let's just in this case say you're paying it till you die. Universal has a savings element involved with it. That's more kind of what I said a minute ago. People creating wealth, they may use a universal policy that has premiums. Some of it goes into a bucket that's invested and that can make money, additional money as well. So those are the three main types of coverage. Which should you consider for yourself? This next slide kind of goes deeper into that, and I just probably have the most notes of this presentation on this slide. So everyone's different. In a lot of cases, if you actually need insurance to cover income replacement or debt and expenses, you probably have a mix. So a good insurance agent will probably talk to you through your younger years into your retirement years. There's probably a mix of both. You may need some term for certain things. Let's just say debt and expenses. Let's use mortgage as an example. So if I like personally, and I'm not saying it's right or wrong, but personally for me, I like a mortgage being covered by its own separate term policy. So essentially, when the mortgage is paid off, the term about the same time the term policy ends. So I've covered my mortgage expense or my mortgage obligation because somebody's got to pay it eventually. So I like having a term policy designed for that. If I were going to have income, well, for income replacement, so if something happened to me, then my wife, Heather, will surely need some replacement of income. She's going to lose income for the household. That's obvious because I'm not here. So, and she works, she has a job, but there's still some things that she likes to do, wants to do, and bills that have to be paid that it would be good for me to have insurance for her. I have that a mix in both term and whole life, both. So for just income replacement. And so I have it in tranches, a little bit different. So, like I said, everybody's a little bit different. I can talk to a client tomorrow about their insurance, and theirs is perfect for them. It doesn't look anything like mine. You need to have this conversation with somebody to make sure it's structured properly. One, you're not overpaying. Gosh, I can't stand overpaying. I mentioned that. How much should you buy? Don't. There are cookie cutter rules out there. I mean, you've heard of things like 10 times your income. I mean, that doesn't make a lot of sense unless one, you're the sole income in the household. It depends on your age because sometimes 10 times doesn't even do close to amount as much as it should be. And if you're 50, 10 times is probably too much. So just, and it depends on how much you have in your savings already. It depends on other income sources, how much you spend money on for fun or versus needs or that you have to, such as power bills and things such as that. So it's a bit bigger formula than that. Some of you may have heard of the DIME formula, and DIME is some of this. What's on the screen in front of you now. It's It's debt, income, mortgage, which I mentioned a second ago, and education. So, for example, if you're younger with children at home that are going to eventually go to private K-12, or they're going to go to college or maybe grad school, that there may be a little bit of that calculation built into your insurance and your life insurance need, just to make sure you fund their education if something happened to them. So there are, and I could probably list off 10 other ways off the top of my head that I've heard insurance agents tell people what they need. Again, some of that just sounds canned to me. Just make sure you have proper coverage, review it fairly often, because if you do pass away, we all are going to eventually, but if you do pass away, you just need to make sure that there's enough there to cover the income, to cover the expenses for your spouse and the household, the kids if they're still at home, and then pay off debt. I'm big on making sure that you don't leave a spouse or your children with debt. So it's whatever you have that you owe, that's definitely going to come into that formula more likely when you talk to me or my team that we're going to look at too. And then I get the question as far as, well, I'm retired or about to retire. Do I need insurance at all, or life insurance? Maybe. I mean, it's not a yes or no, but one thing with income replacement, because I've had this talk and people forget this, and it's pretty common sense. Chris, I'm not working anymore. I've retired, so I don't have income. You have Social Security. So once you pass away, your spouse may get a step up in Social Security called the widow benefit, which you've probably heard of. And if you listen to my Zooms before, you've heard me mention it. But the household is definitely going to take a hit in total Social Security income, more than likely. Depends on if both of you worked and those type of things too. So it could supplement Social Security income. So it doesn't mean you retire, you don't need it anymore. So those people out there who just buy term until retirement years, that may be perfect for them. It may not be. Have the conversation. So I just encourage you to do that. I'm not going to go too much into the beneficiary side. I talked about this too on the estate planning Zoom that I did. But just make sure when I talk about your annual reviews that you actually go in and the beneficiaries that you choose are the right ones. You may have children, you may have your spouse, you may have a trust, you may have charities, you may have a combination of things. So we just want to make sure that you got the right bennies there. And that's, if you ever come to us, and please feel free to do this. If you have an insurance policy, life insurance policy you want to have reviewed, just come to us and say, here's what I got. Can you just look it over and make sure it's good? And some of that too is making sure the company that has underwritten the policy is a good company. I mean, I've been in business for almost 30 years now in this industry, and all of that 30s has some type of touch to insurance, life insurance too. And I've seen companies fold. So just, we'll give you we can track and we can research and tell people what the credit scores are or the ratings for those companies to make sure they're going to be solvent, as well as that when you get later in life that they're not. We also don't want all of a sudden your insurance premiums going through the roof, which can happen, particularly with term and what shouldn't be term but whole life, where you hit a certain age and you outlived your insurance tables. Then all of a sudden the insurance companies go like, all right, you got $1 million of coverage. You can keep the coverage. We're going to double your premium every month. Let's have that conversation before that happens to you too. There is some ways we can kind of pre-plan for that, if you will. Okay. The next thing I want to dive into is one of the ones that is overlooked probably more than any other, is disability insurance. If you're retired, don't worry about this one. Okay. This is not for you. This is for people who still are working, particularly people who are working maybe another, say, 4 or 5 years plus. So if you're a couple of years away from retirement, you may not need this. But if you're bringing home a paycheck and you're 50, 45 years old, you definitely need to look at the type of coverage that you have. There's several. The two main types of disability coverage, which most people have heard of, is short and long. Short term, you have a procedure. You're going to be out of work for 3 months. If your employer does not, some employers are very gracious. They're like, we're going to pay you for being on leave. You're fine. Don't worry about it. So check that first before you dive in and start paying premiums for anything, a disability policy. But if you're in a situation where you only get a few weeks of leave, because in this a lot of places, a few weeks of leave, and you need to supplement that, make sure you have a short-term policy. There are group policies at your employer who have these options, and some of these are just given to you as an employee. You don't have to. They're not something you have to pay extra for, which is awesome. So check that. We can also look at your group cover just to make sure that's an option for you. Long term, you got to go. You have something severe. Then you got to be out for like a year or longer in some cases. That may be something that you have to, from your employer, you have to pay extra for. Is it worth it or not? That's the conversation I want to have with people. Is it worth even purchasing that type of policy? And if it is, can you get it from your employer? One, I'd start there. And two, there may need to be a supplemental, or you may have to buy it on the marketplace. And we can us or anybody who's an insurance agent can help you shop around a little bit and see if there's something there for you. So I ask people all the time to say, as we're going through these conversations, what do you do for a living? So before you overspend on a policy, what is it going to cover? What do you do? I mean, I'm sitting in a chair now. So from Heather, I use our stories a lot. Heather's on her feet all the time. She's a nurse. So I'm the lazy one in the family, apparently. So, sitting in a chair, I need my eyes, I need my ears, I need my mouth, I need my brain. But she needs her legs, she needs her back, she needs her hands to do what she does. It's very physical. So, I mean, we talk about those kind of things. So even with hobbies that we do, I'll give you a perfect example. I love working in my shop. I love power tools. I love to build things. I love those. I have more safety glasses than probably any person on the planet. You can't go 10 feet. You can't even go 5 feet in my shop without a pair of glasses sitting there. So I don't accidentally turn on the skill saw and forget to put the glasses on because I need these eyes is the best I can get them to do the job that I do. So we need to think about those things too, as far as our risk that we take, to make sure we're not doing anything that's going to cause us to have to buy something that's even more expensive per se. So what does disability do? Income replacement is solely what it's for. So if something happens to you, it's going to cover some income. Now, in these policies, there are different things like waiting periods, which you can choose, and some of them are already set, but you can choose before benefits take effect. So let's just hypothetically say it won't kick in for 60 days. For me, that would make me think, okay, this person has enough savings sitting on the side, or their spouse is earning enough that they don't have to worry for about 60 days until they really need to take benefits. Okay. If that means your premiums are cheaper than somebody who needs 30 days, or they're in the middle from somebody who needs 90 days. So if you have cash in the bank, you have investments, you have other places you can pull some money from to supplement income, absolutely take a longer waiting period. That makes complete sense to me. And the benefit limits. There are different limits that you can choose from too. Both waiting periods and benefit limits affect the cost of your premium every month, or however often you have to pay the premium for the policy that you have. So we would want to run pretty detailed cash flow analysis for our clients to say, your gap is here. This is where you're going to be the weakest. This is where that type of policy will suit you the best. So that's why if we ever make a suggestion, we're not just saying pay a premium to pay a premium. We've analyzed that enough, just like with life insurance, to make sure that disability policy really fits what you need. All right. So disability is one I spend a lot of time talking to people. I say is overlooked. Long-term care is another one. I don't want to say it's overlooked because people ask a lot of questions about it. So as I mentioned, disability, if you're retired, you don't need to think about disability insurance because you're not looking for income replacement for not working. Long-term care, if you're retired, it's probably too late to think about long-term care coverage because and I'll explain that in 2 seconds. It's, you probably need to, if you're going to buy insurance for it, you probably need to purchase it in your 50s to 60s. That's where you're going to get let's call it the cheapest. If somebody waits until their 60s to buy long-term care, or gosh forbid later in that 70s, first off, there's not a lot of companies that will even insure you. Second off, it's going to cost you a ridiculous amount of money to get it. So and also when I talk about long-term care coverage, I'm not saying you need to buy an insurance policy. I'm saying you need to understand. I want clients and families to understand they need to think about what's going to pay for this if it happens. If we all live, and long-term care can happen to people in their 50s too, don't take this wrong, but if we all live into our 70s and our 80s and our 90s, our probability of needing care has exponentially gone up every year. We need to make sure that we have things in place that can cover that. That could be savings. That could be a 401k or 403b that you've worked on your whole life to build up. That could be selling your house or land or anything else to cover those expenses. Or it may need for a lot of people to be insurance. So before you sold an insurance policy to cover long-term care, because it is a risk for all of us, analyze, is that what you need, and also analyze the how much of it that you really need, because a lot of us do have savings, or maybe would sell a home if they had to go into an assisted living facility or something like that. So everybody's situation is a little bit different. Just spend some time. And again, I just encourage people to talk to people like us. Let us look at your situation, and let us look at what your risks are out there. And we'll talk about genetics and family history. And I've covered some of this on other podcasts, or not podcasts, Zooms as well. But we just want to make sure you're going to be okay. And this is a great time. If your parents are still living, please ask them what they have in place. Please ask them, mom or dad, if you ever had to have somebody come to the house and help, if you ever had to go into a facility, God forbid. I mean, if it happens, it happens. But if you ever had to, what do you have in place? Is it savings? Are you okay selling the house if the kids had to do that? Are you do you need us to pay for you? I mean, I've said this in another Zoom too. I mean, we had to come out of pocket. So as kids for mom. So if you don't know that and it becomes a surprise, that can disrupt your own personal financial family affairs. So that can mess up your financial plan if it's just one of those. So talk to your parents. It's not don't make it a hard conversation, because it doesn't really have to be. Okay, so I don't want to go too deep into this at all. There are three types, though, of really true long-term care insurance you need to be aware of. Traditional is the old school. Traditional is you have a policy, you pay every month or every quarter or annually, and they cover you. It's just like every other. It's like health. It's like paying for health insurance. You pay a premium, and it covers you for care. That's almost, first of all, that's become incredibly expensive. There's very few companies who do it, and it's just a dinosaur right now. We don't see a lot of this. We see more here. Hybrid policies. It's more of an annuity policy than it is a true insurance policy. These are my favorites. This is where somebody would have just some savings on the sidelines they're not using for right now, and putting some money into that and letting it set for 10 or 15 plus years, and it will guarantee a pretty good amount of coverage for that family. It's got a lot of flexibility to it. It's not super expensive. These are our favorites, and personally. Second favorite is riders. So if you have an insurance policy that you currently have in place, there may be an ability to add a rider to it for long-term care. We could actually help look into that for you too. Just see if that company will allow it. If you're buying an insurance policy, life insurance policy, as I talked about a few minutes ago, that's one of the things we will look at is it worth, or how much more expensive would it be if we bought and it would be not a term policy, it'd be a whole life policy. If we bought a whole life policy for you, and it also had a care rider, which is a long-term care rider, so you don't have to worry about these other two by the time you get there. So that's something that's I would hope a good insurance agent, if you're talking to them, will go over these with you. And again, let us know if you have questions over that. So it's just overall planning. I don't have to touch on this much. I think that makes a lot of sense. We're holistic. It's a holistic strategy. We're looking at it as far as how it's going to affect the whole family. I do not want my kids ever paying for my care. I just don't. I will do everything humanly possible to for mine and my wife to be self-sufficient, that I never have to have my children go, I can't take their kids or my grandkids on vacation because they got to pay for me. Please never have to. I never want to hear that from a client, or a friend or family for that matter. PNC insurance, property casualty. I'm mentioning this just as far as those four. This is way outside my scope of expertise on purpose. I can only know so much. So make sure you talk to your agent, that they have the right things for you. I mean, this goes into your homeowner's insurance. This goes into your auto insurance, and this is not something to take for granted. And definitely, if you have kids who are who are driving under your insurance, as somebody who has a 24-year-old, about to be 24 Friday, a 24-year-old and a 22-year-old, 22 now, yeah, 22. That yeah, that hurts your rate. So analyze this as best you can, because you want to make sure you get the right thing, that you're not overpaying. So for homeowners, auto insurance, talk to your agent, and assure that you're in the right place. I'm a big believer in umbrella policies. So if your agent has never, and that's something I can't even review and give you better opinions on, but if your agent has never talked to you about umbrella policies, please ask him or her, and make sure you have what you need there for your liability protection. I think that is unbelievably huge. Okay. So I'm going to wrap this up. That's a lot on insurance. The key to this is I want you to be able to say, do I have what I need? And you're not going to figure this out from this Zoom. I understand that. But you have some questions, hopefully, now that you can ask someone, your current agent, us. Do I have comprehensive insurance coverage with life, disability, long-term care, property casualty? Do I need all of those? Do I need any of those? And then secondly, am I being educated and regularly evaluated as far as what we have as a family? And do I need to change anything? Sometimes it's canceling policies. I love it when we get to the point to tell a client, hey, look, you've been paying on this for a while. Save the money. You don't need it anymore. Let's cancel it and you're good to go. That's actually one of my favorite conversations. So I also have a checklist that I can email anybody. If it basically is like, do I these are type of things I need to have a conversation with somebody about. It's a little bit more, I'll say it's more in depth, but it's a lot more check boxes on that sheet. So if you want a little bit extra, I can still email you this PowerPoint, just so you can have on record. This will be, obviously, this is going to be on a recording on our YouTube channel. You can rewatch it or send it to anybody that you want to, your kids, your parents, or big to do, a spouse, maybe to watch this, friends and family. If you do want that checklist, though, just email. You can email hdp@highlandtrustpartners.com, and I can email you that as well as this PowerPoint. So just ask us what you want. If there's any other questions that you have, if you feel like you're in a great place, fantastic. If you feel like, insurance gets confusing, I'm not sure I got what I need, I'm not sure I need anything, just email that. Just email me, and I will easily jump on the phone with you, a Zoom with you. We can schedule a meeting and see if we can help. So with that, I'm going to call it a day. I hope you have a good rest of that one, and thank you. I appreciate it.